Hi traders, welcome to the new month of November. As well, I'm welcoming you to another edition of Weekly Forex Forecast on FXLess, which is for 2nd to 6th of November year 2020. In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today's your first time viewing my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're going to be the first to be notified. Also, remember, forex trading is an high risk investment as well and high rewarding investment. Therefore, do not trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the USOIL. And then we're going to wrap up our analysis with the XAU paired against the USD, all the good. So let's dive into the weekly forex forecast right now. Here comes the first currency pairs on our watch list. That's the British pound sterling paired against the USD. In my last weekly forex forecast, I discussed about these currency pairs, and then I pointed out the key level which acts at the price level of the 1.30029. We can see it was a resistance level for price right here, likewise right here, and then as a support right here. And then I stated in the last weekly forex forecast, I said if the bears should put price downward below this key level structure, then it has a high possibility for the bears to expose the dynamic trend line right here. But last week, no, the bears failed to retest the dynamic structure. However, this dynamic trend line right here is still under the influence of the bears. So we can see right from the swing low right here, the bullish aggressive rally held the bullish trend right here, and then likewise right here, the bullish aggressive rally held the bullish trend right here. And then what can you guys notice right from this medium right here? We can see how long it took for the bulls to get to this low high swings right here. We can see we got a high right here, a high right here, and then we got a high swings right here. What I can figure out at this medium right here, is a choppy market, which does signifies weakness in bullish momentum. And then you guys can figure out we had a rising bullish channel this medium right here. And then we all know in a rising channel, it has a bearish implication. So next week, don't be surprised if the bears pull price downward to ensure a close of price below this dynamic trend line right here, which has been acting as a what? High low for price from this level, high low, and the right here as a lower low. That was the midpoint of May and June year 2020. So next week, as a price action trader, we need to pay close attention to the price level of the 1.30029 and the dynamic trend line right here. Okay, let's zoom in on this currency pairs. As you can see right here on this chart right here, next week we need to pay close attention to the dynamic trend line right here. Failure for the bulls to defend this dynamic trend line like they did right here as a high low swings right here, whereby the bears successfully ensure a close of bearish bar below this dynamic trend line right here, then it's a signal the bears are willing to expose the next key level support, which acts at the price level of the 1.27497. And if this should occur, and then if the bulls fail to defend this key level support again, then don't be surprised the bears are willing to expose the next key level support, which acts at the price level of the 1.25115. Alternatively, nothing is impossible in the market. Next week, if the bulls should step in aggressively, whereby they pull price, they still have to clear off this key level structure, which acts at the price level of the 1.30029 before they could anticipate for a higher bullish rally to the next resistance level, which acts at the price level of the 1.32656. But take note, the bulls have to carve a strong bullish LD bar right here. Failure for the bulls to carve a strong bullish bar right here, this currency pairs has a high possibility, high probability to transform within the range right here. So next week, pay close attention to the key level of the 1.30029 and the dynamics trend line right here. The second currency pairs on our watch list is the euro paired against the USD. And then congratulations to all the entire VIP members community of FXLess. We shot the euro paired against the USD last week, and then we made a huge profit on this currency pairs. we can see right from the swing low right here how price transform into bullish no rally, and then we can see right from this medium right here we got a rising no channel before price broke out. So let's zoom in on these currency pairs. Zooming in, we can see right from the rising channel right here price broke right here, we got a retest right here, we got another retest right here, we short right here, downward right to this level, we got out right here. So we can see this currency pair is still under the influence of the base, and then we can see how the bear successfully carved a strong bearish close below the key level support of the price level of the 1.17122. We can see as a support right here, and then as a support right there. So this is a very strong key level structure which the bear successfully ensured a close of bar on Thursday below this level, which does signifies a more bearish downward rally to come on the euro pair against the USD. Also take note, before the bears can anticipate for a more bearish rally to this key level support of the 1.14428, remember there's a low swings right here which is high low. So at this level right here, the bears may have a point of entrance to anticipate for a more bearish rally. And then as well, there's something I want to show you based on the monthly chart frame of this currency pair. So let's check the monthly chart frame. Here comes the monthly chart frame of the euro pair against the USD. We can see from the high of this currency pairs right here got a high, on the right here we got a low high, on the right here we got a low high based on the long-term bearish rally, low high, on the right here we got a low high swings. But take note of what we got right here. Price broke out of this dynamic trend line. We can see how this dynamic trend line has been successfully acting as a point of rejection for price right from the midpoint of year 2007 and then 2009. That was in 208, that's 2008. And then right in year 2020 price broke this dynamic trend line. And then let's zoom in more on these currency pairs. Zooming in right here, we can see we got a dynamic trend line right here which has a high possibility to serve as a dynamic support trend line for price right here, even though we got price carving a bearish engulfing bar. That was month right here. You can see this is actually the month of what, October. We got month of September right here, carving the bearish month to the month of August right there. So next month, if the bears should step in whereby they put price downward, they still have to clear off this dynamic trend line right here, and then before they can actually anticipate to clear off this dynamic support trend, this dynamic support right here. So there's a lot of very strong confluence zones right here which has a high possibility to interest the buyer. So if you are trying to sell the euro pair against the USD based on the daily chart frame, you have to put into consideration this dynamic trend line and then key level structure which is actually acting based on the monthly chart frame. So let's check back on the daily chart frame. So back on the daily chart frame, if you are looking to sell this currency pairs next week, pay close attention to the high-low swings right here. It is best to figure out if price can ensure a well bearish close below this level right here. Then navigate on the lower time frame to look out for a strong bearish price action bar before you can anticipate for a more bearish rally. And then also take note of a dynamic trend line which acts on the monthly chart frame which acts at this level right here. Alternatively, nothing is impossible in the market. If the boost should step in next week, they still have to clear off this key level structure which acts at the price level of the 1.17122 before they can anticipate for a bullish rally on this currency pairs. So next week, pay close attention to the key level structure of the 1.17122 and the swing low right here which acts at the price level of the 1.16500 / 1.1600. The next currency pairs on our watch list is the Australian dollar paired against the USD. Right from the swing low right here, we can see the bullish aggressive rally. Likewise to the high right here, bullish aggressive rally before we can figure out a change in the bullish upward rally to the bearish side right there. So let's zoom in on these currency pairs. Zooming in on these currency pairs, we can see the pattern we got right here. Take note of the key level support which acts at the price level of the 0.70262 and the right here as a support right here, likewise right here as a resistance and the right here as a resistance. And then take note of this high swings right here, the low high swings right here, and then the low high swings right here, and then the new low high swings right here. So the Australian dollar paired against the USD has a lot of bearish sentiment. And then if I should relate this dynamic trend line right here to the key level structure right here, we can see we got what, a descending triangle right there. So I can refer to this descending triangle right here as a triangular top. A triangular top has high possibility to reverse a bullish trend into what, a bearish rally. So this is what I'm looking out for on this currency pairs next week. We can see the strong bearish engulfing bar right here, but on Thursday and then Friday there was a high volume right here whereby the bears failed to put price below this key level support right here, whereby the bulls still defended this key level support. So next week, pay a close attention to the key level support of the 0.70262. Maybe the bears are gonna pull price. That is a well decisive bearish close of bar in order to anticipate for a more bearish rally to the next key level support, which acts at the price level of the 0.66711. But before price can actually get to this medium right here, you have to take note of the high low right here, and then that level acts at the price level of the 0.6900/0.6800. Alternatively, next week, if the bulls should step in whereby they pull price from this key level support, they still have to anticipate higher to clear off this dynamic resistance right there. And then if that should occur, it signifies the bulls willing to put price upward to the next level right there, and that is a low high swings right here. So next week, pay a close attention to the Australian dollar paired against the USD because it has a lot of potential trade set up. Next on our list is the US oil. Right from the swing low right here, that was the midpoint of April and May 2020. We got a bullish aggressive rally, we got a narrow rising wedge, we got a bearish breakout, we got a market within the range, and then we got a key level support which after the price level of the 36.07 as a support right here, at the support right here, at the support right here, and then price broke it with a high volume. That was on Friday. So let's zoom in on the US oil. You can see right now on the US oil, we can see the support right here, support structure, got a support right here. We got no rejection even before price get to this level. That was a rejection of bullish short rally, and then this is it right now. So the US oil, it is the time to pay close attention to the US oil right now because there is a lot of bearish sentiment on the US oil. So next week, pay close attention to see how price react to this key level structure based on the lower time frame, maybe the 4-hour or the 1-hour chart frame. So if you can figure out a strong bearish price action signal bar, then for a more bearish rally, then it's an opportunity for you to short the US oil. Alternatively, nothing is impossible in the market. If the bulls should successfully ensure a close of bar above this key level support of the 36.07, then it's an indication the market within the range right there is not yet over, and then it signifies this market still has a high possibility to transform within the range. So next week, pay close attention to the key level support of the 36.07 to see the reaction of the bulls and the bears right here. Maybe it's gonna be in favor of the bulls, or maybe it's gonna be in favor of the bears for a more bearish rally. But what I can figure out right here, I'm still favoring a more bearish rally on the US oil. It's time we wrap up our analysis with the XAU paired against the USD or the gold. Now we can see the gold is gradually opening up. We can see technically right now we have a more understanding of what is trying to happen on the gold. We can see right now we can figure out though a triangular top on the gold. That is it right here. Support right here, support right here, a high swings right here. We got a low high, we got a low high, we got a low high, and then a low high right there. So this signifies a bearish interest on the gold. So what we need to do as a price action trader next week is we need to pay close attention to this level right here. So I'm gonna apply a major key level support on this current on the gold right here. So I'm gonna have it right here. So that is good. So I have major key level support right here, and that key level support acts at the price level of the 1860.765. So we need to pay close attention to this key level support next week. We can see the first retest right here, we got a second retest right here, we got a third retest right there. So next week, pay close attention to this level. If the bulls fail to defend this key level support, whereby the bears put price downward below this key level support right there, then it's an indication the gold is what? Planning up to depreciate in value to the next key level support, which acts at the price level of the 1793.802. And failure for the boost to defend this key level support, like they did right here, have a high probability to depreciate to the next value of the price level of the 1751.108. Alternatively, next week, if the boost should step in on the gold and then put price to make a strong bullish rally, they see how to clear off the key level resistance, which acts right there as a support, right there as a support. And you can see right there, even though we have a choppy market right there, this key level right there, see have a high possibility to serve as a point of entrance for the boost, as where the dynamic trend line we got right there, which means the boost have to clear off this confluence zone right there before they can be able to anticipate for a more bullish rally on the gold. So next week, I'm focusing my attention on the gold, because I can figure out a well-defined technical chart pattern set up on the gold, and then which does support a bearish movement on the gold. So next week, pay close attention to the gold. So guys, thanks so much for watching this weekly Forex forecast from the beginning to end. This is what I have for you in this weekly Forex forecast. And then if you haven't joined my free Forex trading webinar class, there's a link under this video. Click on that link so you can become a member of the free Forex trading class today. And then if you are looking out for a reliable Forex trading community, that is a community where you learn how to trade the Forex market, the crypto market, the energy market, I have a link under this video as well. In this community, I'm going to share with you my personal trade setup, my personal trade opinion, as well. There are other members in this VIP member community which are experienced trader as well. So it's not just a community whereby you have been given trading signals whereby you don't know why the trading signal is working out, why you are making loss, and then why you are making profit. So in this community, you're gonna learn how you're gonna become independent trader as well. If you are looking out for a reliable Forex brokerage firm, and honest trustworthy brokerage firm, there's a link under this video as well. Click on that link so you can start trading on a reliable Forex brokerage company today. So guys, that's all I have for you, and then do have a wonderful weekend. Peace.